Hey guys, it's Julie here with TipRanks, and today we're taking a look at 3 stocks recently bought by top hedge fund managers. So let's get into it. Alright guys, welcome back. Thank you all so much for being here. Today we're taking a look at some of the top performing hedge fund managers and their recent portfolio activity, specifically which stocks they've been adding to their portfolio, and we've narrowed in on 3 stocks that also come in with a strong buy consensus from Wall Street. So we're going to take a look at these companies, what it is that they do, and what those analysts are predicting for the stock's future. I found today's stocks by using the top hedge fund managers page. You can find this right under the Top Experts menu, and here you'll get a list of all the top hedge fund managers, which you can sort by assets under management as well. Just before we get into today's stocks, this is a friendly reminder that if you enjoy the video, make sure you hit that thumbs up button and that you're subscribed to the channel as well. Now let's get right into these top hedge fund stocks. First, we're looking at the portfolio of Christopher Nimchowski's Marshfield Associates. He is currently ranked number 1 out of nearly 500 hedge fund managers, and their hedge fund has over $4.5 billion in assets under management. Looking at their list of activity here, we're going to sort by holding change to see which stocks they've been adding to the fund. And one stock that Christopher recently increased their position in was Strategic Education. Trading under the ticker STRA, they're currently priced at $88.10. Overall, in the past year, they are up nearly 13%, but you can see recently they did drop off here at the end of July. We'll get into that in just a second, and are down over 17%. Strategic Education does provide educational services, offering both on-campus and online post-secondary courses. They also offer programs to help develop job-ready skills for high-demand markets. Their major services include education benefit management, general education, skills building, and coding boot camps. With their accredited degrees, non-degree skill pathways, and coding schools, they serve adult students globally through 3 different core areas, with their U.S. higher education, education technology services, and their Australia and New Zealand component. The company has over 100,000 students enrolled yearly, and last year had total annual revenue of $1.13 billion. In the last quarter, Christopher's Marshfield Associates brought their total position in strategic education to over $200 million. And the stock currently makes up about 4.4% of the overall portfolio. And you can see this is a stock that they have bought and sold over the years, locking in some gains on the rise and buying on the dip. And speaking of buying on the dip, you did see that big drop-off on the chart back at the end of July, and that was aligned with the company's Q2 earnings report. But they did come out with both an earnings and revenue beat. For their Q2, earnings per share came in at $1.33, beating expectations by 14 cents per share and growing notably year over year. Revenue came in with a beat as well, increasing 8.5% to $312.3 million, which was over $4 million ahead of expectations. The company also highlighted that for the second quarter, their student enrollment within the United States higher education segment increased 8.4%. But management provided some softer than expected future outlook, causing the big sell-off on the stock. Following that earnings report, we did have an analyst from BMO who did reiterate their buy rating, but slightly lowered their price target. Along with the buy rating, BMO noted that the company's Q2 results beat expectations with that strong US HE segment enrollment growth and accelerating Australia-New Zealand segment enrollment growth. While the management's tempered expectations drove the sell-off, the decline was a bit extreme. Strategic Education has 4 current analyst ratings and does come in as a unanimous strong buy. The average price target comes in at $130, which would imply an upside potential of 47.5% from current prices. Looking at those ratings down below, we do just have 2 that have actually given a price target here. The one is BMO at $125 for an upside of nearly 42%, while our high end is a bit more recent here from Barrington at $135 for an upside of 53%. Next, we're taking a look at the activity of John Kim's Night Owl Capital Management. John Kim is currently ranked number 4 out of nearly 500 hedge fund managers, and this hedge fund has a net worth of about $668 million. And we're taking a look at a stock that they started a brand new position in, that is GE Vernova. They trade under the ticker GEV and are currently priced at $264 per share. Now, we can't quite look back an entire year as they did just begin trading on their own back in March of 2024, but since then the stock has gained 91% and in the last 3 months has climbed 51%. GE Vernova spun off from their parent company General Electric last year and is an electric power company. They manufacture and provide energy equipment and provide support services. The company has a focus on green technology and has publicly stated their target of reaching carbon neutrality in its operations and facilities by 2030. Their customers generate approximately 25% of the world's electricity, putting this green tech firm in a position to lead the global transition to cleaner power. They also offer solutions for hydroelectric power, nuclear power, and even steam power generation. Last quarter, Night Owl Capital took a position worth about $13 million. So the stock now holds nearly 2% of the total portfolio, and they're not the only hedge fund to increase their position. In the last quarter, hedge funds overall increased their holdings by 16.4 million shares. And looking down below, you can see some adding greatly to their positions and quite a few starting brand new ones. GE Vernova has only reported a couple of quarterly reports since spinning off on their own, and while the last quarter did slightly miss on expectations, the company did raise their full-year guidance. They reported Q2 earnings per share of $4.65 and revenue of $8.2 billion, which did grow about 1% year-over-year, but missed estimates by $60 million. They did, however, see total orders of $11.8 billion, which exceeded their revenue by 1.4 times. The company then raised their full-year 2024 guidance, saying that they now expect revenue to trend towards the higher end of $34 to $35 billion. Now, overall, the stock does come in as a strong buy, but recently we've had a couple of mixed opinions. One analyst at Evercore did increase their price target on the stock, while one analyst from HSBC did downgrade it to a hold. Evercore bumped their price target up to $300, saying that while GE Vernova management has been adamant that it remains committed to its offshore wind business, the company did announce plans to shrink the size of the business while the industry takes time to reset. The firm does continue to see ample runway for shares given the early innings of a power spending cycle and cites an incremental leg of growth and margin expansion likely to come to fruition over the coming quarters and years. On the other hand, we did recently hear from HSBC, who gave the stock a hold. They said that the stock's valuation is already pricing in a strong gas equipment and service cycle, and although the company is well placed to benefit from rising U.S. onshore wind demand, there is risks of higher than expected costs to deliver its $3 billion offshore wind backlog. Overall, the stock has 15 current analyst ratings, coming in with 12 buys and 3 holds. And the average price target of $279 implies an upside potential just shy of 6%. Looking at those recent ratings down below, on the low end, we do have a buy rating from back in September from JP Morgan with a downside of 9% as it's already been surpassed. More recently, we do have a couple of those hold ratings with a few percent downside, while we have several ties for our high-end price target, all at $300 per share for an upside of over 13%. If you've made it all the way to our third stock today, then this is a reminder to make sure you hit that thumbs up button. Last but not least, we're taking a look at the recent hedge fund activity of Steve Baum's Cypress Funds. Steven is currently ranked number 6 out of almost 500 hedge fund managers, and this hedge fund has a net worth of about $745 million. And looking at their hedge fund activity, there is only one stock that they increased their position in last quarter, and that stock is ASML Holding. It trades under the ticker ASML, currently priced at $820. Overall, in the past year, the stock has gained nearly 40%, but in the last 3 months is in the red, falling over 22%. ASML Holding is the world's supplier to the semiconductor industry. They give the world's leading chip makers the power to mass-produce patterns on silicon, helping make computer chips smaller, faster, and greener. They are not a chip maker themselves, but are the world's leading manufacturer of chip-making equipment, designing and manufacturing the lithography machines that are an essential component in chip manufacturing. Their customers are companies such as Intel, who use their machine in fabs or microchip manufacturing plants to create the microchips that are eventually used in many electronic devices, including smartphones, laptops, and much more. Last quarter, Cypress Funds started a brand new position in ASML Holding, with a position valued at about $17.7 million, making up about 2.4% of their total portfolio. And once again, they were not the only one increasing their position in the stock. Last quarter, hedge funds increased their holdings by over 426,000 shares, many companies starting some brand new positions or adding to existing ones. They'll be sharing their next quarterly report next week on October 16th. This does follow their Q2, where they had both an earnings and revenue beat and reaffirmed their full-year guidance. For their third quarter, analysts are anticipating earnings per share of $5.48, which would be a 41-cent increase over last year's. For their Q2, earnings per share came in at $4.38, beating estimates by 35 cents per share, and revenue came in at $6.2 billion, which also exceeded analyst expectations. They said that while there's still uncertainties in the market, primarily driven by the macro environment, they expect industry recovery to continue in the second half of the year, and their outlook for the full year remains unchanged. They see 2024 as a transition year with continued investments in both capacity ramp and technology. Following that last earnings report, we did have an analyst from Argus Research who increased their price target on the stock. They noted that the stock had sold off following their Q2 results despite topping expectations on revenue and earnings, on commentary signaling the potential for additional tightening on semiconductor exports. The analyst added that ASML's comprehensive product portfolio is aligned with customers' roadmaps, providing cost-effective solutions in support of all applications from leading edge to mature nodes. And with 4 current analyst ratings, ASML Holdings does come in as a unanimous strong buy. The average price target of $1,150 implies an upside potential of 40% from current prices. Looking at those recent ratings down below, we do have several that were slightly increasing their price targets following that earnings. The most recent came from Wells Fargo at $1,000 for an upside of 22%, while our high-end price target is Argus with an upside of 52%. So that is a quick look at 3 strong buy stocks that have all been bought up by some top hedge fund managers recently. Let me know your thoughts on these 3 stocks in the comments down below. I always love hearing from you guys. Of course, please keep in mind these videos are never a suggestion to buy or sell any specific stock, so please make sure you always do your own research and due diligence. Thanks so much for watching. I hope you have a great day, and I'll see you back here next time.